Welcome back, everyone. In today's video, I'm going to take you on a journey of why I bought and sold Rivian stock and what was going through my mind at the time. Rivian currently trades at $14.79, market cap of $14 billion. By the way, shout out says to like and subscribe. So yeah, why I bought Rivian stock. Number one, late last year, Rivian management promised that they're going to be making upgrades to the line in Illinois, Normal, Illinois, to make improvements in Q2 to improve the gross margins of their R1 vehicles to gross margin break even, which is a significant improvement from the previous hugely negative gross margins for that product. That's number one. Number two is that Georgia has been put on hold. So Rivian is no longer going to be producing the Georgia plant at this time for the R2 or R3 models. So that's on hold. So that's going to save them a lot of money. And then number three was, I'll go to that in a second. So anyway, I purchased the stock. So here's the purchase order itself. Now, keep in mind, this is a speculative play. Rivian loses a ton of money each quarter, and they may very well go bankrupt. It's very possible that they will go bankrupt. So anyway, I purchased just a speculative position. It was about 1%. This is my Patreon portfolio. I purchased about 1% of this Patreon portfolio. It's a smaller portfolio of mine for about $1,000 at $12.60 each. The other reason I bought was due to the hype of the R2 unveiling. This was about a day or two prior to the R2 being unveiled. So with the R2, Rivian made a lot of promises, and obviously they unveiled the vehicle. They canceled the Georgia line, or the Georgia plant, and they said, you know what, we're going to build the R2 in Normal, Illinois. Fantastic. Fantastic. The R2 itself looks nice. It's going to be a smaller compact car, starting at $45,000, hopefully coming in 2026. There it is again. Now, what does the R2 promise? It promises 300 miles of range, quarter windows pop out, flashlights, 4695 battery cells, a structural battery pack, kind of stealing a few ideas from Tesla there, 0 to 60 in less than 3 seconds, yada, yada, yada. Anyway, the important parts, it's smaller than the R1, and they're promising a $45,000 starting price. Now, hopefully for Rivian, they're able to actually produce that and sell it at that price at a positive gross margin, but we will see. So, what happens here is that Rivian secures up to $5 billion from Volkswagen, and the shares soar more than 50%. Now, this is what I was sort of thinking, okay, what do I want to do with Rivian stock? So yeah, Volkswagen plans to invest up to $5 billion in electric vehicle startup Rivian, starting with an initial investment of $1 billion. The additional $4 billion is expected to be invested following the establishment of a joint venture, according to joint releases by the automakers on Tuesday. Rivian stock is down roughly 49% in 2024. This article is about a month and a half ago. Yeah, I'm sort of delaying this video because I wanted to detail, the reasons I sold, and I had to sort of hold off on the video because of that. So yeah, Volkswagen Group plans to invest $1 billion. We discussed that. Okay, so you can read that if you like. So yeah, we believe the opportunity ahead is significant. This deal is possible because we're focused on vertically integrating our network architecture, topology, vCPUs, and associated software platforms. I've spoken about the importance of these platforms in the past and how difficult it is to replicate them. Volkswagen is expected to use Rivian's electrical architecture and software stack for vehicles beginning in the second half of the decade. So this is a long-term commitment, according to Scringe. He said that the joint venture does not include anything with battery technologies, vehicle propulsion systems, high voltage systems, or autonomy, more on that later, and electrical hardware. Scringe said he expects the joint venture will be led by a balanced leadership group, including 2 co-CEOs, with Rivian appointing the technical leadership and Volkswagen appointing a chief operating officer. So anyway, the closing of the joint venture is expected in the fourth quarter of this year. Now, keep in mind that VW actually said that this isn't final yet. They are going through their checks and balances before they finalize their decision on the joint venture. So it's not final yet. Here's a little bit more information in the actual tweet from RJ Scringe on the joint venture. Okay, so anyway, digging into that. When I purchased the stock, the idea was that the R2 would be able... I knew when I purchased it that Rivian was going to have to dilute their shares. And that's what the VW venture does, is it dilutes shareholder shares in Rivian stock. That $1 billion is it's a loan that can be converted. It's a convertible loan that can be converted into shares of stock, is what that is. So anyway, just keep in mind, the only way Rivian could have survived was either through a dilution like this, selling shares, or being bought out. That was basically my buy thesis, and that's why it was a speculative play. That's why it was such a small part, 1% of my portfolio, a speculative play. I mentioned that in the previous video where I purchased the stock. I said then also, this is speculative, and it was very risky. Rivian can still go bankrupt. Even with this, they can go bankrupt. Okay, so since then, Rivian came out with results for Q1 2024. So what happened in the first quarter? In the first quarter, they had revenues of $1.2 billion and a negative gross profit of $527 million. Please note, $171 million of that was for plant upgrades scheduled in the second quarter in order to get them to gross profitable for the R1 line in Q4 2024, which is later this year. So just keep that in mind. So the negative gross profit would have been a lot less without those factory upgrades, without the $171 million. So that said, here's my main issue with Rivian is that they should never have been gross margin negative. There's not really a good reason for it. For example, I got a couple examples from the same company, but I got a couple of examples from the same company. Let's look at Tesla. When Tesla was a much smaller company, this is back in 2012 and 2013. In 2012, Tesla only had sales of $385 million, but they had a gross profit of $30 million. In 2013, Tesla had automotive sales of nearly $2 billion and a gross profit of $456 million. You'll see that if you look at Tesla's history, they never had negative gross profit. They always sold their vehicles at a positive gross profit and then used those profits towards operating expenses in order to invest in their future vehicles. That was what they did. They took those profits and they invested in the next vehicle. They took those profits, invested in the next vehicle, and so on and so forth, until they became really profitable. Now you might be thinking, okay, this was one snapshot year. What else did Tesla do? Okay, so in 2014, Tesla had a gross profit of $881 million. In 2015, $923 million. And as I mentioned, Tesla's was never gross profit negative. So there wasn't really ever an excuse for Rivian to be gross profit negative. The only reason Rivian is gross profit negative is because they over-engineered the R1 lines. And they kind of admit that themselves through these factory upgrades in Q2, which are just now completing those factory upgrades, which actually are now complete. Those factory upgrades are complete. So basically Rivian admitted through these upgrades that they should have been gross margin positive. And another thing these factory upgrades do is they increase the output on these lines by 33%. Now keep in mind that Rivian is expecting results this year of about 57,000 units, which is about the same as the previous year. They're expecting the same year over year, but with 33% higher efficiency. So as a result, they're actually canceling a line. They're going, I think, from 3 lines to 2 lines or something like that. They're canceling a third of their lines in order to improve profitability. But still, even then, the main thing is even if Rivian becomes gross margin positive slightly, they're projecting slight gross margin positive. Even if they become positive gross margin, Rivian's total operating expenses the last quarter were at $957 million. And they need to make that up. That's a lot of money still output. I mean, the gross profit was a negative $527 million. Operating expenses was $957 million, almost double the gross profit. They really need to work on that. To dig in further, let's look at the cash flow. So you also have to add capital expenditures because that's also cash going out. Capital expenditures was negative $254 million. That's the 3 months ended March 31st, 2024. Let's look at the balance sheet. So what are their balances? How much cash do they have on hand? So Rivian, this is pre-VW's investment. Pre-VW's investment, Rivian had a little less than $8 billion in cash on hand. So Rivian was going to run out of money before even starting the R2 in Normal, Illinois in 2026. They were going to run out of money. So they had to go to VW, say, hey, VW, we need some cash. Invest in us. We'll set up a joint venture and get us through the R2 ramp. That's the whole thing is to get them through the R2 ramp. And then hopefully Rivian will then become profitable. However, there's a lot of risk in that. Here's Rivian's history. You can also notice the last 4 quarters, Rivian's revenues have been stagnant. Now, they're not the only ones. Tesla revenues have also been stagnant. For their EV divisions, Ford's doing terrible, GM's doing terrible. Everybody outside China is doing terrible in their EV division as of late for the last year. The big thing, though, is there's a difference between being stagnant and gross margin negative by a large margin and really unprofitable and a huge negative free cash flow and having a huge positive free cash flow. There's a big difference between those two. And this is the scary chart. So anyway, keep in mind that this is the free cash flow statement for Rivian, including capital expenditures and operating cash flow. You'll notice Q1 2024 had free cash flow of negative about $1.5 billion. Now this includes the factory upgrades. So you have to subtract that out. So in coming quarters, this number will improve by a lot, but it will still be negative for a while. We don't know at this point when Rivian will become, if they'll become cash flow positive. We don't know how far out that will be. It'll be sometime after the R2 ramps. And they have to survive through the R2 ramp. And that is very difficult. Tesla almost went bankrupt during the Model 3 ramp, if you'll remember. Tesla had to build a tent outside their factory in order to ramp up the Model 3, and they nearly went bankrupt. And that was with a positive gross margin. So all that said, VW made their investment. Rivian stock jumped 50%. I said, you know what? I'm out temporarily. Now, I sold the initial investment, about $1,000. Again, small amount, 1% of the portfolio, a speculative play. I sold that initial investment. Now, why do I say temporarily? Now, what Rivian needs to do is they need to show a path to profitability. Not a path to gross margin profitability, but a path to free cash flow profitability. That's what they need. They need a positive free cash flow, a path. I need to be able to visualize, okay, they're going to be free cash flow positive in 2 quarters, 3 quarters, 5 quarters, whatever it is. I need to be able to model that out and say, they're going to be free cash flow positive. At this time, I believe once I can figure that out, then I can decide, okay, you know what? Let's invest or let's not invest. I can figure that out then. But until I can see a path to profitability, Rivian's going to be on my watch list. And then here's the other sell order. Now, here now, just to equate the sells versus the buys, I did sell at a higher price than I purchased the stock at. Now, what did I put the money toward? Now, what I did is I actually made a huge investment relatively to this portfolio recently. I purchased $10,000 into a stock. Which stock? You can find out for $5 at my Patreon. It's just $5. You can follow actually all of my Patreon portfolio for that $5. You can see all my purchases, all my sales. Again, I'm a long-term investor, so I don't sell much. So really, you're mostly going to see all my purchases that I make and when I make them. And I post them to Patreon as they occur. So this $10,000 purchase, it got posted to Patreon already. They know about it. They know which company it is. Which company is it? You'll find out on Patreon. So yeah, thank you for watching. And don't forget to like and subscribe. Now I'll see you in the next one.